But let's also move on and talk about the IT space, because HDFC Securities hosted its 6th IT sector investor conference. The key message on demand was positive, notwithstanding the prevalent macro situation. To tell us about the key takeaways there, Apurva Prasad, who's the research analyst IT sector at HDFC Securities, joins us now. Apurva, good morning. I want to know what the outlook was on Europe, because clearly there's a large energy crisis brewing there. It's going to hit manufacturing quite a bit. Any indication on delay in client spends, and the companies that have an exposure there, would you sort of cut their growth estimates?
Right. Good morning. Thanks for having me. So, Sonia, yeah, the commentary around demand is fairly positive, whether it was across the tech experts or most of the corporates that participated at the conference. If I have to call out the only area or the only pocket of slowdown which is called out is the manufacturing vertical within Europe. It's a very small component in the overall portfolio. But the areas that look fairly strong would be the biggest part of the portfolio. So BFSI, ex of mortgage, the commentary was fairly positive in terms of spend. The overall outlook on the IT services is fairly strong, so demand continues to be quite resilient. It's expected to grow much faster than what it has grown historically. And I think some of the supply side related concerns, those seem to be easing out, so that should be seen as a positive. And if I can, talk about another aspect, that would be historically the impact that the sector has seen from captives. It's not happening around this time. So I think from a relative basis too, those should be another set of positives to look at.
Your preferred sort of ideas are Infosys from Tier 1 and Persistent from the mid-tier space, right? Could you run us through the reasons, especially Persistent?
Right, Shan. So our pecking order preference is based on the highest magnitude of growth on a relative basis within the subsegment. So within Tier 1, we do expect Infosys to be growing fastest within peer set. And so is the case for within the mid-tier sets. We expect Persistent Systems to be growing, at the top end. And if you adjust for valuations, for the growth that they're expected to deliver, if you look at the kind of visibility that the company has, so if you're talking specifically about Persistent, the kind of order bookings that they've had, even in the most recent quarter, which was their highest ever, I think the line of sight near term, the overall demand scenario, some of the company-specific factors, which is, medium-term drivers for margins, I think, all put together, I think you're looking at a strong 25% earnings compounding for the system. Broadly, I think from a sector point of view, if you just zoom out a bit and you, sort of slice and dice where the correction is coming, I think while a lot of correction is to do with the uncertainty around FY24 revenue and what could that potentially be, if you look at the earnings cut that have followed in more recently last quarter or so, that's been more a function of margins. So it's really two ways, how it can play out. One is in a scenario that even if margins bottom out from here, you may not have enough positive triggers. But at the same time, looking at the quantum of earnings cut that has happened already, which is about 5% or so the last 3 to 4 months, that's pretty much the max or the average drawdown historically that the sector has seen, in terms of where it was estimated and where it's landed. So from a risk-reward standpoint, we're fairly positive here. But Infosys and Persistent would be the top picks.
Okay, Infosys is a top pick. Apurva, good morning. I was reading a note from an analyst that while last quarter the concerns were mainly about margins, going forward there could be some concerns on top line as well. Especially given, what some of the big banks like Citibank might be doing. Do you think it's maybe making it too much out of just a couple of instances, or is there a genuine risk that maybe going forward there could be some serious risk to the top line growth itself for IT companies? Forget about the margins.
So Anuj, the way to look at it is what sort of the incremental risk, because if you look at the quantum of growth, it's certainly going to be lower than FY22, where growth is certainly topped out. But if I'm looking at most of the lead indicators, those are still, indicating a very strong demand environment. So whether it is most of the large partners and their own growth rates, or most of their own lead indicators, which is their own order bookings or remaining performance obligations, or if you say in terms of the commentary that you referred to. So a lot of these banks, which are probably doing flatline growth, the tech spends are going close to double digit. And these are very mature sort of spenders historically, and these are large pools, spending pools. So I think BFSI, which I referred to earlier, barring the mortgage piece, which is probably 5 to 10% or probably more closer to 5% of the overall tech spend. Barring that, I think it's looking fairly solid. The only pocket, like I was saying earlier, is more around Europe manufacturing, which in the overall scheme of things is very small. And even then, there are no volume cuts or pricing cuts. It's more of delays, some delays in decision making. So from the context of where growth can land, the near-term visibility continues to be fairly high. I think most of the hiring outlook, while it may look to come off from FY22 levels, I think some of the fresher hiring for the year, those commitments are pretty much look intact. And most importantly, if you have to look for an indicator, the companies are able to get price increase too from the end customers. So I don't think that has really changed. So from that standpoint, I think I would put that as positive.
Okay, thank you for joining us, Apurva. Have a great day. That's the word coming in on the IT space. So demand is fairly positive, and their top picks at the moment are Persistent Systems and Infosys. Let's slip into a quick break. Up next, Mitesh Thakkar and Shrikant Chauhan will join in for some technical trades. Stay with us.